Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is September 29, 2024. We are almost into October, one of my favorite months of the year, tied with January, April, and July. And the reason it's tied with those other 3 months is because towards the end of the month, we're going to see and be able to read how many small companies and mining companies have performed in the first quarter of financial year 25. It's the first quarter, yeah. First quarter of financial year 25. I do like this time of year. And after a very slow September, which came just after a very busy August, I am waiting for a little bit more news flow from companies on the ASX. Now, the agenda for today's video is fairly similar, almost identical to other technical update videos. We'll go through indices, commodities, Bitcoin, Ethereum, bonds. We'll also have a look at 10 individual companies' charts. I think it's 10, might be 12. I'm pretty sure I counted it, and it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yes, 10. I counted that really quickly. Anyway, so let's get stuck into it, and let's first pay attention to indices, focusing on the Australian market. We'll look at the XJO and the XSO, and this is the daily chart for the XJO. And we are right at the top of the trading channel. And we're being right at the top of the trading channel for the last 5 or 6 trading days. Now, we did break above this top of the trading channel last week, and then we pulled back. And that was on, I suppose that was on Friday, last Friday. I'm just going to confirm that. Yeah, that was last Friday, 20th September. And then on the Monday, we had a pretty negative day. I don't remember that at all. Down 0.69%. In fact, we had 3 negative days in a row. And then we had a really good day on Thursday. And on Friday, just like last week, we're now back at the top of the trading range. Now, we could follow the top of the trading range forever. We could break above it, and maybe we'll develop a new trading range. That would be quite bullish. Or we could see a bit of weakness in the XJO, XAO, XSO, maybe not the XSO, over the next few months, just because we are at the top of this range. So the top of the range does tend to mean there is a greater possibility, not an absolute, but a greater possibility we will see a bit of weakness. But again, it's not an absolute. Now, this also means I'm less likely to take trading positions because of that increased chance that we're going to see a bit of weakness in the markets. Now, there's a lot of things that could happen that could lead and force the markets higher, but there's a lot of things that could force the market lower. And I might show you a few tweets that I did read this morning in regards to exactly that. But I'll show you those tweets in Monday's ASX Daily Rundown video if I don't forget. But the most important thing, if you do have a look at the XJO, it's in a nice little bull run since the start of 2024. In fact, towards the end of 2023, we did see the market turn up, and it's gone up nicely this year. In fact, it's gone from about 7,100 up to 8,200. So first 9 months of 2024, the calendar year, have been quite good for the XJO. Now let's have a look at the XSO. Actually, before we do that, I just want to have a look at the week. So I would expect it to be, in fact, the XJO was flat, almost exactly flat, up 0.03%. Now, the interesting thing about the weekly candlestick is there was a fair bit of buying during the week, and that happened on the Thursday session. So when you see this sort of candlestick where you have a long shadow below the main body, in this case, the main body is almost zero, there's nothing there, which is sort of like a doji, almost exactly like a doji. That tells us that when you do see that long shadow, there's a bit of buying coming in. If we saw the long shadow above the main body, like we saw back in July, this 1 week there, 29th of July, that would tell us that there's a little bit of selling. And then we saw the market drop that next week. That was during that really bad few days we saw at the start of August. So sometimes 1 week, 1 day candlesticks can tell us a lot about the sentiment and the mood of the market. So if I just saw this 1 day candlestick, this 1 week candlestick, I'd say or feel a little bit more bullish than maybe I would usually do. Okay, so let's have a look at the XSO. And the reason I decided to have a look at the weekly XSO or XJO candlestick is because I'm pretty certain the 1 week XSO is really bullish. We had a really good week in small cap land. So let's have a look. Yes, really good week in small cap land. In fact, small caps up 2.76%. 3 really good weeks in a row, in fact. So 3 weeks, we've seen it rise 3.1%, 1.8%, and 2.8%. In fact, my portfolio's had an absolutely brilliant time the last 3 weeks, and that's probably why. In fact, not only that, the XSO at the close of the week is the highest it's been since 2022. So we are talking about a 2-year high for the XSO. So I'm actually feeling a little bit more bullish about the small caps right now because of what's happened in the last few weeks. And the very fact that it's broken above the recent high we saw in March of this year. So the XSO is looking really good right now. I'm probably a little bit more bullish about the small caps than I am about the larger caps, which is the XJO, which is the biggest 200 companies on the ASX. So the XSO is looking really good. If we have a look at the daily chart, it's very similar than the weekly chart. It's looking good. And very good day on Thursday. XSO up almost 2%. And that was the sort of the breakout day. And then even on Friday, it wasn't down all that much. In fact, it was up 0.13%. I'm not sure what's going to happen on Monday because as we turn our attention to the American indices, there was a little bit of weakness on Friday. So let's have a look at the American indices right now, starting with the Nasdaq. In fact, the Nasdaq was down 0.53% on a Friday. In fact, there's been 2 negative days in a row. Now, if you do have a look at this chart, it's starting to look a little bit better than it did even 1 week ago. In fact, I think I might have mentioned it needs to break up above the high the Nasdaq saw on the 22nd of August, and it did that during the week. So that's a good sign moving forward for the Nasdaq. But 2 weekdays in a row means, doesn't mean much. I'd need to see it for a lot more from here for me to be way more bearish than I am right now. And when I say way more bearish, I'm not bearish at all. In fact, I'm a little bit more bullish now about the Nasdaq than I was this time last week, just because it was a good week. And in fact, if you look at the weekly chart for the Nasdaq, it was up 1.1%. So 3 good weeks in a row for the Nasdaq as well. So I would be, if I had to rank XJO, XSO, Nasdaq, I'd put XSO first, Nasdaq second, and XJO third in terms of bullishness. Now on to the Dow Jones. This one is actually interesting. And we're on the daily chart here. There was a little bit of selling. So remember I was talking about the XJO, there was a little bit of buying during the week because we had that doji with the long shadow below the main body, and the main body was almost non-existent. In the Dow Jones on Friday's session, there was a bit of selling. Now, the Dow Jones did get to an all-time high on the Friday session, but we did see, it got as high as, 42,628, but closed at 42,313. It might not seem a lot, but that is a fair bit. And if we have a look at the daily chart, or not the daily chart, let's say the 1-minute chart. Yeah, so the peak in the Dow Jones happened at about 1:30 a.m. local time. So this is about 2 hours after the market had opened, and really nice first 2 hours of trading. But since that high at 1:30 a.m., the Dow Jones actually did fall. So that's telling me there was a little bit of selling coming in, maybe just because of the all-time high, maybe something was released at 1:30. In fact, we can have a look. No, there's nothing here. Dow Jones closes at all-time high. S&P, no, there's nothing there. Anyway, so that's the Dow Jones daily chart. So a little bit of weakness in the Friday session. So again, this does make me a little bit more bearish over the next few days for the Dow Jones. But overall, if you look at this, it's a beautiful looking chart. This is a daily chart. In fact, I'd say this is better looking than the Nasdaq. Weekly chart looks pretty good as well. No complaints at all when you look at the daily and weekly chart for the Dow Jones. In fact, the last time the Dow Jones Industrial Average was in a longer-term bear trend, so I'm not including the COVID-19 financial panic, not even including that period in 2022, 2023, when interest rates were rising, even though there was a bit of a pullback, a bear market. I wouldn't actually define it as that because the longer-term moving average trend was still green all through that period. But the last time we were way more bearish with the Dow Jones was way back in 2008. A beautiful looking chart for the Dow Jones, beautiful looking chart for the Nasdaq. In fact, if we have a look at the weekly Nasdaq, same thing. It was starting to look a little bit bearish back in say October 2022, but then it turned up. But again, Nasdaq, beautiful, beautiful looking chart over the longer term. Anyway, what about the Russell 2000? So we had a really good week for small caps in Australia. Was that translation, or was that translated from the American small caps? And the Russell 2000 will show us all. And no, completely different. In fact, the Russell 2000 is right in a resistant zone. So in fact, a lot of red there. In fact, 3 red candlesticks. Now, when you see a red candlestick, it doesn't mean there was a drop in the indices or the company from the previous day. It just means it fell from the open to the close. That's what it means by the red. So that means selling through the day. And we've had that 6 trading days in a row for the Russell 2000. So nice strength in Australian small caps, not as much strength in the American small caps, the Russell 2000. And in fact, for the week, the Russell 2000 was down slightly, 0.14%. But overall, if you look at the weekly chart, it's in an uptrend. I just need to see the Russell 2000 get above this purple box, which is a resistance zone. So that would be around about 2,280. To be safe, we'll just say 2,300. Okay, so that's the American indices. They're all looking fine. Nothing to be concerned about. No reason to go out and sell everything you have. Suppose no reason to go out, sell your house and buy shares either. I would never, ever recommend that to anyone. Ever, 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 ever. So don't do it. Ever, ever, ever. Would I ever say that? I would never, ever give advice. Now on to international indices. We'll start with the Nikkei. Pretty good week for the Nikkei. In fact, let's just turn our attention, or just look at the weekly charts for these. Nikkei up pretty nicely, 5.6%. Not as good as the Hang Seng. So don't forget, during the week in China, they announced that the government announced stimulus, and investors love stimulus packages, even though there is a price for it. And usually the price is in the future. We have to pay, whenever we get stimulus from the government, we're eventually going to have to pay a price. But most people are just very short-term thinking, and they're willing to make a sacrifice in the future for good times now. Anyway, so let's have a look at the Hang Seng. And it was a beautiful week for this particular indice for Chinese companies, not only Chinese-based companies like Alibaba, a few other ones there, but also any sort of company in Australia that has any sort of business in China. Things turned quickly positive if they were negative. Some companies were already positive. But anyway, Hang Seng up 10%. 13% for the week. In fact, you have to look at the daily chart. It's just a little bit ridiculous. Yeah, it's just, in fact, it broke out. So there was actually a downtrend in the Hang Seng, and that has come to an end during the week. This downtrend has been in play for about 3 years. And yeah, this is the breakout we have seen for the Hang Seng. Pretty good week for the DAX, if I remember correctly. Yes, the DAX, the German index, up 4%. This is a nice looking indice as well, nice looking chart. I would assume, yeah, last 2 days, pretty good. DAX up 1.7% on Thursday and another 1.2% on Friday. Not quite as bullish for the UK. So UK is struggling a little bit more. Still going sideways. I'm not sure what's happening with the FTSE at all. In fact, I would assume, I'm trying to think of the main makeup. So Canadian and Australian markets are fairly similar. Chock-a-block full of mining companies and financial companies. And I would assume the FTSE is made up of oil companies. I know a few, and also probably some financial companies as well. But anyway, the FTSE has been going sideways for 6 months or so. And if you have a look at the weekly chart, it was up a little bit, but 1.1%, but not quite as bullish as other markets. But during the long term, it's been an uptrend since 2021. So it's gradually increasing, which is exactly what you want. You don't want to see any indice go on a massive tear. Gradually increasing is probably the best way to go. Okay, so that's the indices around the world. Well, not all around the world. I'm usually just focus on the few. And maybe I should include some other ones. Maybe the Djiboutian stock exchange, which I don't think they have. I don't think that's real. Maybe that's something I can do in a future life. Develop and start the Djiboutian stock exchange. I'm not sure what sort of companies are in Djibouti. Anyway, I'm rambling on a little bit now. So let's turn our attention to commodities. What I'll do is I'll focus on the weekly charts first. Gold. Now, a little bit of weakness towards the end of the week, but that's understandable because gold has been on a tear for 3 weeks in a row. In fact, it's been on a tear for about 6 months. In fact, gold broke through back in, was that March? Yep, start of March. That was the breakout, and it's continued to go higher ever since then, and 3 really good weeks in a row. I really think gold probably wants a bit of a breather here, sort of like we saw back in. I'm just going to decrease the size of my face. Probably what we saw back in August. You can see there was a really good week in the 12th of August, and then the next 3 weeks, gold just went sideways. That's a nice little breather, sort of like a little flag or pennant, or whatever they want to call it. We don't see much selling, and in fact, you can see there's a main body, very thin, and there's a little bit of buying, a little bit of shadow above and below the body. That's telling us there's a sort of a fight between the bears and the bulls. No one's winning, and then eventually the bulls win, and gold rips higher on the 9th of September, and it just keeps on going up. But I mentioned there was a little bit of weakness in the last few days of gold, maybe the last day of gold. Yep, Friday. It was a little bit of pullback. The only reason I thought that happened was because I did notice a few gold companies were down on Friday, and gold did slip 0.5%, but nothing significant. And the daily chart looks brilliant as well. Beautiful looking chart for gold. So no complaints here. Now let's have a look at silver. I assume silver is starting to look a little bit better. It is at a resistance area though. It is having trouble getting above that area. So that was the highs for silver back in May. And now 4 days in a row where it's really struggled to get above it. There was one day on Thursday where it did get above and then it pulled back. In fact, all 4 days, the last 4 trading days, silver went above and then pulled back. So there is a bit of resistance at about $32. But overall, it's starting to look a little bit better. And definitely if it breaks above $32, that would be fairly bullish for silver. And what else looks pretty good right now? Iron ore. Now, I was wondering why iron ore wasn't ripping higher when all the iron ore companies in Australia were. And then for some reason, this particular chart just decided on Monday, which is tomorrow, to rip higher by 11.4%. So that is what the ASX iron ore companies were showing, that iron ore prices have increased. So not sure what's wrong with this one. Maybe I'm looking at the wrong iron ore chart. So let's see if there's another one there. I'm not sure which one's the right one here. Is that the one I'm looking at? No, that's the one I'm looking at. No, there it is. I'm going to have a look at this one. This one looks better. Iron ore spot. And maybe I'll use this one because this tells me something completely different than the previous iron ore chart. So from now on, I am going to look at this chart for iron ore. If I can find, there it is up there, and markets. And what I'll do is I'll do this. I should be doing this when I'm not recording, but I would forget otherwise. So let's turn our attention to this particular iron ore chart. Yeah, this is what I would have expected to see because the Australian iron ore companies were going on an absolute brilliant ride. And this tells me, yeah, it's going on a absolutely brilliant ride. Now, that's not, well, although I was going to say, it doesn't mean the downtrend is an end, but iron ore just got above the previous highs. Yeah, so definitely looking better for iron ore right now. I don't like the price here, $768, maybe $76.80. I don't know. I'm going to try to find the best iron ore chart, but this is better than the one I was using. Anyway, TSI, iron ore spot. Okay, what else is looking good? Copper. Copper has been on a tear. Copper might have had the best week. No, probably not. In fact, iron ore, this TSI, iron ore spot price, if you look at the week, it was up 15.6%. I don't think copper had that good of a week. So let's have a look at what copper had, or what copper did, up 5.9. So nowhere near. But if you do have a look at the daily chart, it was an important week for copper because it has broken out. He's moving into a new uptrend, which is interesting because there is one copper company I own, and we haven't seen any significant movements just yet. Share price is increasing. Hillgrove Resources. Oh no, I'm wrong. Share price has really ripped higher. Anyway, just totally ignore what I'm talking about. It has ripped higher. Okay. I thought maybe it hadn't. Anyway. So iron ore has had a pretty good week, and I do like what we saw during the week. So there was a really good day on Tuesday. The next day was flat. A really good day on Thursday, and then Friday was flat or slightly down. I do like to see that. I would love to see copper just go sideways for a little bit and then keep on going higher. Keep on going higher. This is also, don't forget, is copper sometimes referred to as Dr. Copper. Some people look at it and at copper to sort of give, it's sort of like a proxy for the health of the economy. So this might be the world telling us, or the copper market telling us, that the economies around the world are starting to look a little bit more healthy than they were not that long ago. Okay, what else? Okay, let's go to uranium. I'm pretty sure uranium had a pretty good week. Yeah. Yeah, it was up for the week. 2 good weeks in a row for uranium. This is the spot physical uranium, up 4.5% for the week. A really good day on the Monday session. Yeah, in the Monday session. And the last 4 days of the week, again, it's going sideways. So not a lot of selling. And you can see there was or is a bit of a body below each of the candlesticks. And that is telling us we have seen a bit of buying coming in. So in fact, I don't mind the uranium chart right now. This is pretty good. And I think if you do have a look at quite a few of the uranium companies on the ASX, they're looking really or much better than they were. In fact, let's do that now. Boss Energy, starting to turn higher. I would assume Bannerman. Let's have a look at Bannerman. Why not? Oh, Bannerman is a little bit better than Boss. What about Palladium? They're all looking very similar, and this should be proof that the way or mining companies chart or price goes is highly dependent on the underlying commodity, which is a reason why I don't call mining companies, or would never call mining companies, high quality companies, because they're too dependent on the underlying commodity they are mining, or many commodities they are mining. Let's have a look at oil. Now, one of the tweets I'm going to show you in the ASX Daily Rundown video has to do with oil, and why oil is not why oil was dropping, but because oil is dropping, oil prices is dropping when we do have some geopolitical uncertainty in the world. I mean, what's happening with Israel, Lebanon, Iran, and that Hezbollah leader being killed. There is concerns that there is an increased chance that we are going to see an all-out war. And if there are those legitimate concerns, then technically oil should be going higher or rising, but it's not. So even though there is a belief that copper, Dr. Copper, is a proxy for the state of the economy, there's also an opinion that with oil actually falling, when it probably should be rising, is that a clue that maybe the economies around the world aren't as healthy as we think? So it's quite a complicated issue. Now, because where oil is right now, just above $65, I'm a little bit more interested in some oil companies on the ASX. So I'm going to show you 2 individual companies' charts later in the video. What about gas? Now, gas is gone on a bit of a tear. I just noticed. Yeah, gas looks pretty good. Bit better than it did. Weekly chart for gas. If it pops up. And for some reason, this is not working. TradingView is not. Sometimes when TradingView doesn't work, here it goes. Sometimes when TradingView doesn't work, all I have to do is refresh it. And yeah, lithium, not much moving with lithium. I did notice there was it was a pretty good week for some lithium companies, but overall, lithium not doing much. Pretty good week for coal companies as well. I noticed New Hope, Whitehaven, Yancoal all had a pretty good week. And just by looking at this, yeah, coal had a pretty good week as well. Let's have a look at tin. Tins, I have no opinion about tin right now. I have a feeling nickel had a pretty good week. In fact, just have a look at the line chart for nickel. Not that good a week. The reason I thought maybe nickel had a good week was because a few nickel companies I do follow, like Nickel Industries and Centuris Metals, had a pretty good week. And what I mean by a pretty good week, let's have a look. Go back to candlesticks. In fact, NIC, or Nickel Industries, did pop up onto my radar, one of my scanners, because share price has popped up. Some good volume coming in during the week. And this was one chart I was thinking of including into this video. So here it is. It's starting to look pretty good. Not quite a 6-month high, but 3-month high. And the other one was Centuris. This one is, I'm pretty sure, an exploring nickel company in Brazil, Centuris Metals. And this one is starting to look pretty good as well. Not quite there with this one, but it's starting to look okay. So that's nickel. Palladium, which is the last of our commodities. So it looked like Palladium was breaking out a few weeks ago, but it's had a pretty good pullback since then. So less bullish on Palladium right now, but definitely looking better than it did, say, towards the start of this year when it was in well-defined downtrend. Okay, let's turn our attention to Bitcoin and bonds. Just looking at the price for Bitcoin, it's up to 65,000. So the chart is starting to look a little bit better. And the good thing about Bitcoin is I wouldn't say I was concerned, but each successive major high was lower than the previous one until now. So now this next high is going to be higher than the previous high. So there is potential that this really weak downtrend in Bitcoin has come to an end. I'd love to see Bitcoin get above 74,000, get to a new high. What about Ethereum? Does this look better? Not quite. I am more bearish on Ethereum than I am Bitcoin, but it's okay. I only have a little bit of money. I want to say a little bit, like $5,000 in Bitcoin. Will I add to my position? I don't know. It's just a store of value. That's the way I look at it. What about bonds? So bonds have been on a little bit of a tear the last few weeks. You'd thought maybe they'll go the other way. Don't know. Anyway, so bonds, and I would call this just a bit of a dead cat bounce. So bonds are still in a downtrend, and I think the most recent, I think we have seen a local high, maybe that's what you can call it. And since it didn't get above the highs we saw at the start of September, this would be confirmation that bonds are still in a downtrend. So if we continue to see bonds, and we did see bonds drop the last day of the week, trading week, if we continue to see bonds dropping and then fall below 3.9%, that would also confirm that bonds are in a downtrend. And I'm not going to show you Australian 10-year or the TLT because the TLT should look pretty good. In fact, there was a bit of a buy the dip situation with TLT, because this should mirror, maybe not exactly, perfectly, but this should mirror the 30-year American bonds, and it sort of does. In fact, if I saw this chart, I'd be going, ooh, maybe now's the time to buy some TLT. And finally, the Australian dollar. I actually do like this chart. I like this a lot. Keep on roaring higher. It's at 69 cents. We saw a high back in December 2023 at about 68.5 cents. So the Australian dollar now at, interesting enough, this is really good. So you draw a line at 69 cents. And the whole reason I draw a line there is because we saw a little double peak, double top back in 2023. This was the middle of that year. And then it really struggled. It didn't quite get to 69 cents back in December. And look where it is now. So 4 days in a row where the Australian dollar got to 69 cents and then pulled back. And on this day, the Australian dollar finished almost right on 69 cents, 68.97. And you can just see the one-day candlestick for the Australian dollar. It's a doji. So again, fight between the bears and the bulls. This looks like it's going to break out very soon. That's my call. I'm going to say this is going to break out. And remember at the start of the video, I said when you do see a very long shadow below the main body, that can be fairly bullish signal. We saw that with the XJO this week? Look what happened with the Australian dollar on the 5th of August. Look at that massive shallow below the main body, and then look what happened to the Australian dollar after that. So you can decipher, or probably the best way to say it is, 1 day candlesticks or 1 week candlesticks or 1 period candlesticks can give you a fair bit of information about the sentiment and the mood of the market. And on that particular day, I would have been a little bit more bullish about the Australian dollar if I was trading currencies. I do know a lot of traders trade currencies. It's very popular. Okay, so let's turn our attention to the individual companies charts portion of the video. And we're going to start off with a company called Spark New Zealand. And there's one reason this one is of interest to me. It's not the chart or the share price action. It's the volume. Look at the volume just massively expand the last 2 weeks. Just exploded. That is telling me something interesting about Spark New Zealand, that this could be a bottom or there could be a little bit of bounce. I would also surmise that there could be some value at these levels, and that could be driving interest in this company. I had a very quick look at the financials of this company. And when I say a very quick look, it was very quick. Not much growth in revenue, but I did notice that the revenue or the profit for this particular financial year 24, was lower than the last 5 years. So $300 million of profit. Current market cap of this company is $5.14 billion. And that means the PE ratio is like 18. So you might say, well, PE ratio 18 is fairly high. But again, the profit for this year was lower than the last 5 years. If they can get back up to the profit, maybe not last year. Last year it was $1 billion, which probably was because of a one-off. But if you go back between 2020 and 2022, the profit of this company was just shy of 400 million. So if this company can get their profit back up to 400 million, get above 400 million, I think this company is looking fairly cheap. And that would mean the PE ratio is maybe 12 or 13. The other thing is the dividend yield is 8.9%. And I think that is what driving interest in this company right now, why you're seeing a really good volume coming in. So I think I'm going to call it the bottom for Spark New Zealand. And I'm actually thinking of buying some shares in this company because of that reason, that volume. Sometimes that's all it takes me is the volume, increase in volume. Anyway, so that is a potential buy for me on a Monday. Tuas, I wasn't going to show you Tuas. 1, 2, 3. I think I got rid of the wrong company. I got rid of Tuas, but why not? So yeah, I wasn't going to show you this one. I'm pretty sure I've mentioned Tuas maybe once or twice last week. This is a beautiful breakout, and I won't talk about my wrong decision with this company. It was a double mistake. It wasn't a double. It was a double mistake. Yeah, it was a double mistake that was beneficial for me. I won't talk about that. But the company did release their results, and this is what I look for all the time. I'm looking for a positive financial announcement from the company. It doesn't have to be financial statements like financial year results or half-year results or quarter results. It can be just a profit upgrade, a market update from the company or trading update. I'm always looking for those sort of announcements. And the other thing I'm looking for is share price moving up on great volume or higher than normal volume. And this company saw that on, what day was it? Tuesday. Share price rallied 14% on higher than normal volume. In fact, double than average volume. And the share price didn't quite get to a long-term high on that particular day. It needed to break above $4.80. And you can see it took a couple of days for Tuas to do that. But on Thursday, it broke through that level on strength. Not volume strength. I would have preferred to see really good volume coming in to coincide with the share price increasing. What did it increase? 7.4%. So this is exactly what I'm looking for all the time. So this is a breakout. I'm calling it a breakout for Tuas. If you're not confident it was a breakout, what I'd like to see next is if you do see the share price pull back, it pulls back to 480 and doesn't fall through 480 and then pulls higher. That would be a nice little successful test of 480. So there is potential it could do that, or there is potential share price could keep on going higher from here. Okay, let's turn our attention to baby Bunting, a potential breakout. Not necessarily on positive financial news, but 2 really good days in a row. Share price increased 6% and then 6.5%. And this was after the company released their results on the 20th of August. Share price did pop up on that day, 8.85%. Not really a breakout by my definition. It was almost, it was over a 3-month high, but I do prefer a 6-month high. And just some other factors in this chart wasn't really convincing for me to take a position in baby Bunting on the release of the results. Then after they released the results, share price sort of went sideways. Didn't really do anything for about a month. And then all of a sudden, the last 2 trading days of the week, share price has really popped up higher on some good volume coming in. Not sure what caused it. Could be just a broker report, a positive broker report. I don't think the company did release anything. And let me just confirm that. Baby Bunting. I would have remembered if the company did release something positive. No, nope. But this could be a breakout. Even though the financial news was over a month ago, the share price has reached a 4-month high. So I'm a little bit more positive about Baby Bunting now than I was on the 20th of August, which was, over a month ago. So you can just see, company released a positive announcement, share price went sideways for over a month. And then finally, a little bit of action in the share price. Sometimes it does pay to be patient. Onto a company called Trajan Group, TRJ. Don't know much about this company. If you look at the long-term chart for Trajan, it's been negative for a while. Share price reached a high of 460 back in 2022 and has been dropping ever since. Now, in saying that, it's starting to look positive. I'm starting to like this chart. It was starting to look a little bit positive back in July 2023, but that didn't last. But this is starting to look a little bit better. Share price, if it gets above $1.25, that would be good. It's really struggling to get above that level over the past month. And if you just draw an uptrend line, just do a line like that, it's looking pretty good. Share price of this company did get to highs of about $1.30 back in February and April. So that would be another sort of resistance zone, but not a very strong resistance zone because there wouldn't be many shareholders who bought at those levels. But this chart is the sort of chart I'm looking for. It's nice. Don't know much about the company, but is that an issue or should that be an issue? Just look at the chart. Another chart I do like also is Perenti Limited. This one, it's a mining company. Used to be called Ausdrill. So they're mostly a drilling company for mining, so mining services company. If you do look at the daily chart for this company, you can see on occasion share price does go up and down in trends. And really over the last probably 4 or 5 months, share price really not doing anything, just going sideways. And what I wanted to see is the share price get above about, in fact, I'm going to raise this just a little bit higher. There is. I want to see the share price, or wanted to see a share price get above $1.06 because that was sort of between $1.03 and $1.06 was an important resistance zone for this company. On the flip side, I did want to see the share price drop below about 94 cents. That would be negative. So the way I would trade this is just wait for the share price to get above or below the top of that trading range. And what have we seen? Well, we can see it by looking at the chart right now. I'm just going to put in the bottom of the trading range there. There it is. And what we have seen the past week and a bit is the share price has risen to $1.08. So it could be a breakout for Perenti. I do like the look of this chart. This could be the start of a long-term uptrend for this company. It could also be a fake breakout. It could also be a shorter-term uptrend. And I do like to play these sort of situations because, it could go many different ways. And I think the risk is fairly low moving forward. Another mining company, gold company, who had a bit of a mining disaster in Turkey back in February of this year. Share price on that particular day dropped 52%. Forget what happened. Was a mining collapse or something? I forget what happened. Anyway, the share price of this company was as high as $33 back in 2022. Now it's $8.80. Potential maximum pessimism has been realized in the share price. And it's hard to see here, but I'm just going to draw a line right there. So share price of this company was struggling to get above this level, about $8.40. And the share price in the last few weeks is finally showing a little bit of strength and has pulled above that level. I probably don't like this chart as much as Perenti, maybe not even as much as Trajan, but this chart is starting to look a little bit more interesting. So again, this is a gold mining company, and just with the continued strength in gold, that could benefit this company more and more in the future. I'm not sure what's happening with that Turkish mine. So maybe again, this is a case where just look at the chart and don't care about the fundamentals of the company. Just trade the chart. Now, so I just showed you three. Oh, actually, in fact, I've showed you 5 bullish-looking charts or potentially bullish-looking charts in a row. Now onto one chart that's starting to look a little bit weakish, and this is a bank, Bendigo and Adelaide Bank. Now, the other major banks, or the 4 major banks, not looking weak yet, but we have seen share price pull back. This one is starting to look weak, starting to show signs of the trend changing. So before this, share price was in a beautiful uptrend. Share price struggled to get above 1260, got to 1260 in the 1st of August, reached 1260 again on the 22nd of August, and then pulled back. And then the share price fell below a low on the 6th of August, on the 2nd of September, and then the new high struggled to even get to 1260. And now, on the last trading day of the week, share price fell below the previous low, which means we have now seen a lower high and a lower low, which is the first signs of a share price moving into a downtrend. So yeah, in fact, you could argue 2 lower lows or 2 lower highs, and you could even argue 2 lower lows. So this is the first signs of a share price moving into an uptrend. Bendigo Bank, but definitely not. I'm not bearish yet on the major banks, because this could be just a pullback, even though they are significantly overvalued. This is CBA. Definitely just a pullback. We saw this same sort of pullback back at the start of August, and will this continue? Remains to be seen. But Bendigo Bank definitely a little bit more bearish than the other major banks. Now, on the flip side, we have Praemium, sort of like a smaller player. I think I've heard this referred to as a smaller Hub24 in net wealth. I don't know about that. Anyway, this definitely looks better. It sort of tried to break out back in July, and then pulled lower. Tried to break out when the company released the results on the 26th of August. It looked like it was going to, and then share price did pull back. Pulled all the way back from about 55 cents to 48 cents, and then a few really good weeks in a row, and the share price has reached a long-term high. In fact, at the current level, the last time share price was this high was way back in November last year. Looks like they must have had a bad AGM, because on the 22nd of November, share price dropped 35%. Anyway, so this chart is looking pretty good. So I would compare this one favorably to Trajan, Baby Bunting, and SSR. Perenti versus Praemium. I don't know. You have a lot of choices. If you do this sort of strategy, there are a lot of choices, and choices always coming up. So even if you miss 1 or 2, it doesn't really matter, because there's always one just around the corner. So I do like Praemium. Okay, so the last 2 companies are oil companies, and I like oil companies potentially. And Santos is at a support level. In fact, if you look at the weekly chart for Santos, this is a long-term support level. When I say long-term, I'm talking about 2 years. So last 2 years, whenever Santos gets to about $6.80, we do see share price of this company rally a little bit stronger. And the top of the range, and this company has been trading in a range, is just over $8. So there is a nice, not quite 20% potential gain for Santos at these levels, but it's sort of a low-risk trade, because if you go back to the daily chart, what you could do in these sort of setups is you buy if the share price gets to 680, and on the anticipation there's going to be a bounce. On the play, there will be a bounce. And if the share price falls to, say, below 675, maybe the share price falls to 660, just take your loss and sell, because maybe that would be sort of a breakdown below support level. So the potential for a loss is fairly small. No, I shouldn't say that. The potential loss is fairly small, but the potential gain is pretty good, maybe a 20% gain. And not only that, if the oil keeps on running hard, I shouldn't say keeps on running hard, if oil runs hard, and share price could break out above $8. So there is potential larger gains, just potential. So this is sort of a low risk play that I sometimes do, but It's not my favorite trade, but it on occasion does work fairly well. If I had to choose between Santos and Karoon, I don't know. So Karoon's chart looks a little bit weaker, but again, it's at a support level as well, or right above a support level, which is about $1.40. This support level for Karoon goes all the way back to 2022. In fact, it was developed as a resistance zone back in 2021. And then that resistance became support. And then the share price tested this level back in June 2022. I probably would guess, and my guess could be wrong, that if there is a bounce in oil and oil does start going up, there would be potentially high gains in Karoon Energy. So I probably prefer to trade Karoon. And you could see the share price could get to, say, 240, 250, 260. And at these levels, that's a much bigger gain. In fact, if it gets back up to above 210, we are talking about a 50% gain in share price. So just based off that, I probably would prefer Karoon Energy. Maybe more risk in Karoon. But again, it's a low risk because if the share price falls below $1.40, you just sell. Maybe not $1.40. Put a little bit of a margin of safety there, maybe $1.30. You just take a small loss, maybe a 10% loss, but the potential gains are 50%, particularly if, again, oil goes on a run. Okay, so that's all I have for this particular video. What is your favorite individual company's chart? My favorite, I don't know. I do like Spark. I do like Karoon because they are at support levels, and I think they are both low risk. I do like Spark because of the volume. Perenti, I do like Perenti as well. And Praemium is pretty good as well. Anyway, leave your favorite chart in this particular video's comment section. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.